Hey guys, it's Rafi from the Endgame Investor, and today I want to talk about the Great Reset, how it is nothing new, how it is impossible on elitist terms. Now, the Austrian School of Economics discussed this in detail, in particular in Murray Rothbard's magnum opus treatise on economics, Man, Economy, and State, and his discussion of hyperinflation, and how this all has to do with the relationship between monetary inflation, meaning the increase in the money supply, and rising prices. Let's begin with a few charts. Let's start with the relationship between the money supply growth and rising consumer prices all the way back from 1981. At the beginning stages of inflation, meaning an increase in the money supply, the increase in the money supply and rising consumer prices do not go hand in hand. They are not a one-to-one correlation, at least not at the beginning. And we can see since 1981, the blue line shows a 1,200% increase in the money supply since the bond bear market bottom of 1981, when interest rates maxed out and Paul Volcker, then Fed chairman, reinstilled a level of confidence in the US dollar, which made it continue as a valid money substitute for gold. Since then, consumer prices have about tripled across the board. Of course, it's not exactly that, and the CPI now is different than it was back then. I understand that. This is just a heuristic to show you trends. But it's not always like that. There is not always a lag between consumer prices and monetary inflation. Sometimes they do go one for one, and that is when the public begins losing its faith in the money substitute, which in this case is the US dollar. And this is the next chart. Here we see the monetary inflation rate versus rising consumer prices from 1971 to 1980. 1971 was when the gold window was closed, and at that point, faith in the US dollar began to decline very fast, and consumer prices began to rise almost in lockstep with the monetary inflation rate. Inflation, the money supply, grew by 134.7% from 1971 to 1980, to the end of 1980. And at that time, consumer prices rose about the same, 111%. And that was the time when gold and silver went to all-time record highs, because rising prices and the monetary inflation rate were 1-to-1. Now here is another chart, short term. This is the monetary inflation rate, the money supply increase, versus consumer price increase versus the CPI increase since January 2021, year to date. We can see already that this year, inflation in the monetary sense and rising consumer prices are going very close to lockstep as they were in the 1970s. Now, what does this have to do with the Great Reset? Here I'm going to read you a passage from Murray Rothbard, Man, Economy, and State, how he describes the Great Reset that many people are fearing, and how he explains that it is impossible. Not that a reset itself is impossible, but that a reset on the state's terms or on elitist terms is impossible. And here is exactly why. And you'll see how this relates to the charts that we just saw. This is Man, Economy, and State, Murray Rothbard, page 1018, describing the ultimate limit, the runaway boom, also described by Mises, by Ludwig von Mises, but in easier language by Murray Rothbard, his student. The ultimate limit, the runaway boom. With the establishment of fiat money by a state or by a world state, it would seem that all limitations on credit expansion or any inflation are eliminated. In other words, the state now has absolute power to pilfer from society whatever it wants through the inflationary process. The central bank can issue limitless amounts of nominal units of paper, unchecked by any necessity of digging a commodity out of the ground. They may be supplied to banks to bolster their credit at the pleasure of the government. No problems of internal or external drain exist. And if there existed a world state, This is the reset that many of the libertarian crowd is referring to, or a cooperating cartel of states with the World Bank and world paper money and gold and silver money were outlawed. Could not the world state then expand the money supply at will with no foreign exchange or foreign trade difficulties, permanently redistributing wealth from the market's choice to its own favorites, from voluntary producers to the ruling castes? This is what the elites want. Permanent inflation so they can take whatever they want, whenever they want, and permanent impoverishment of the masses. Now, many economists and most other people assume that the state could accomplish this goal, meaning the Great Reset is possible on their terms. Actually, it could not, for there is an ultimate limit on inflation, a very wide one to be sure, but a terrible limit that will in the end conquer any inflation. Paradoxically, this is the phenomenon of runaway inflation or hyperinflation. Now, here is where we get to those charts that I just showed you. At the beginning of an inflationary process, you will see that the actual inflation of the money supply leads the increase in consumer prices, meaning there is a lag between consumer prices rising and the inflation. And that can last a very, very long time. Here's what Rothbard says about it. When the government and the banking system begin inflating, the public will usually aid them unwittingly in this task. The public, not cognizant of the true nature of the process, believes that the rise in prices is transient and that prices will soon return to normal. As we have noted above, people will therefore hoard more money, i.e. keep a greater proportion of their income in the form of cash balances. This is known also as the increase in asset prices, stocks, bonds. The social demand for money, in short, increases. As a result, prices tend to increase less than proportionally to the increase in the quantity of money. The government obtains more real resources from the public than it had expected, since the public's demand for these resources has declined. If we go back for a minute to this chart since 1981 shows how the inflationary process of the money supply is leading to a great extent the consumer price index gains of the same time period. So we are in the initial stages of the inflation that Rothbard is describing here since 1981. Now back to Rothbard. Eventually, the public begins to realize what is taking place. It seems that the government is attempting to use inflation as a permanent form of taxation, but the public has a weapon to combat this depredation. Once people realize that the government will continue to inflate and therefore that prices will continue to rise, they will step up their purchases of goods, for they will realize that they are gaining by buying now instead of waiting until a future date when the value of the monetary unit will be lower and prices higher. In other words, the social demand for money falls, and prices now begin to rise more rapidly than the increase in the money supply. This stage of the inflation is the beginning of hyperinflation, of the runaway boom. Here it continues. This process will not continue long, however. As the rise in prices continues, the public begins a flight for money, getting rid of money as soon as possible in order to invest in real goods, almost any real goods, as a store of value for the future. This mad scramble away from money, lowering the demand for money to hold practically to zero, causes prices to rise upward in astronomical proportions. And here he says, when this runaway stage is reached, the economy in effect breaks down. The market is virtually ended, and society reverts to a state of virtual barter and complete impoverishment. Commodities are then slowly built up as media of exchange. The public has rid itself of the inflation burden by its ultimate weapon, lowering the demand for money to such an extent that the government's money has become worthless. When all other limits and forms of persuasion fail, this is the only way, through chaos and economic breakdown, for the people to force a return to the hard commodity money of the free market. Two things flow from this conclusion of Rothbard's. One, the Great Reset will happen in a hyperinflationary crisis, but it will not be on the elite's terms, because once their monetary unit is destroyed, they lose their grip on the economy, and the free market reasserts itself through chaos, while commodities are built up from the ground up, and whoever has them now gets to buy the most real resources when this actually happens. Second, there are many mainstream economists, practically all of them, that believe that the Fed can control the rise in consumer prices from here. However, as we know, there is a lag between the inflationary process and a rise in consumer prices. There is a long lag, which means that there is also a lag between them stopping the inflationary process and consumer prices and consumer price gains stopping themselves. There's a lag in both directions. So just because the Fed tightens, which it can't even really do anymore, even if the Fed does tighten, there is going to be a lag between tightening monetary policy and falling consumer prices, which have never actually happened since the inflationary process began. The most that has happened is they've stayed steady for maybe a year, but that's it. So no, there's no way the Fed can control this. When consumer prices start to spiral out of control, there's nothing that they can do, and we will reach the hyperinflationary proportions of this humongous 50-year-old bubble, returning to the 1970s parity between money supply growth and consumer price gains. And that's when the hyperinflationary match will be lit. And the reset will happen, but on the public's terms and not on the elite's terms. This is Rafi of the Endgame Investor. Please support me by clicking in the link below for a 2-week free trial to the Endgame Investor, my daily precious metals newsletter. Things keep getting more interesting by the week, and you might want to follow along. And I wish you all a good, insane week in this crazy world.